Good late morning, everyone. Andy here. Today we're going to do a recap session, Sniper Scalping Systems recap session, where we focus on our trading system called the PEDC, Pulse Extreme Divergence Count. Honestly, I believe this is probably our most powerful trading system. You know, the standard Sniper, the Pulse Extreme Line Cross are probably two of the more favored systems. But those individuals that take the energy and effort to really learn the PEDC start to realize, oh my goodness, this really is a powerhouse. And it is, and we're going to review it today. We'll look at all the trades in crude oil, and maybe we'll look at one more market as well. And what the PEDC essentially is doing is it's locating and identifying areas of short-term divergence that we can take advantage of. It uses the pulse, a combination of analysis between the price action bars and the pulse extreme indicator. And the first bunch of trades, I'll go slow and really give you the definition. Just like all Sniper systems, it's very visual in nature, and the more you focus on it, the more PEDC trades you identify, the more it becomes second nature. So here's what we're looking for. Notice how, let me get rid of this, that is obviously a Pulse Extreme Line Cross winning trade. Notice how I've identified them with numbers, 3 down close price bars. In the middle there is an up close bar, but we have 3 down close price bars. During that time, when there are 3 down close price bars, what does the Pulse Extreme Line do? It's completely flat. Does it move down on those down close price bars? No, it does not. So that's showing us that there is upside divergence, because we've had quite a few down close bars and the Pulse Extreme Line has not moved down. That's telling us the future. We can predict the future a little bit, and the odds and probabilities favor continuation to the upside. And what triggers off a Pulse Extreme Divergence Count trade, a PEDC trade, is when we have a strong pulse count of at least 2 or more. In this case, we have a pulse count of 3 bars, price bars closed down, no down moves in the pulse line, so 3 minus 0 is 3. We have to have at least a pulse count of 2 to have a trading opportunity. And then all we need is an up close price bar and an up hook in the pulse line also. When those two things happen on the same bar, boom, we're long at the open of the next bar, easy big winner. Then we continue forward and we get the same similar formation again. We get 2 down close price bars. During those 2 down close price bars, does the Pulse Extreme Line move down at all? No. So 2 minus 0 is 2. We're trade ready as long as we get an up close price bar and an up hook in the pulse line at the same time, which we did. We're long at the open of the next bar, big easy winner. Okay, those trades are gorgeous, obviously happening right before this big burst to the upside. Those individuals looking to hold runners for maximizing gains were in good shape on that opportunity. We then get up here and we have some topping formation happen. You can see the bars are transitioning to red and maintaining mostly red. We have a lot of downside divergence in our OS telling us, you know, okay, this might be an area where the market wants to head back lower. And then we do in fact get a Pulse Extreme Divergence Count trade. We have 2 up close price bars, and over that period of time the Pulse Extreme Line does not move up at all. So we do not have, notice how we have 3 or 4 up close price bars here, but we have 3 up moves in the pulse line, so there's no trade there. But when you come back over to here and we have 2 up close bars, the pulse line does not move up at all. That shows us we have divergence to the downside. Then we get a down close price bar, down hook in our pulse line. We're short at the open of the next bar, big easy winner. 3 PEDC trades in a row, 3 wins. Now we have 2 nice up close bars here, and the price action does not move higher over those up close bar, but when we get the down hook, we don't get a down move in the pulse line. So that's why that wasn't officially a trade. There'll be many sniper owners that will take trades like that, even though they're not official, because they are still solid, just not fitting the official rules. Our next pulse extreme divergence count trade came around 9:15, and you can see we have two down close bars. We have no down move in the pulse line, and we have an up close price bar, and we have an up hook long at the open of the next bar. Nice easy winner. This move down here with those three moves down would have been a trade as well if we had gotten the up hook, but again, we did not get the up hook on the pulse line the same time the price bar hooked up. So it doesn't happen as often as you think that it might, and when it does happen, it's a very powerful setup. That's our fourth winner in a row. Our fifth winner in a row came down here. I stretched this trade out over a long distance just to show how you can extend the pulse count if you want to. Truth of the matter is you could have just looked at these four bars and called this number 1, number 2, number 3, and number 4, and determined that during those four down close bars there was one down move. 4 minus 1 equals 3. We would have a positive pulse count of 3, and then the up close price bar and the up hook in the pulse extreme line, excuse me, we would be long at the open of the next bar. The way I identified it is I went back a little bit further. You can see we have 7 total down close bars. During that period of time, we have 3 down moves in the pulse line. 7 minus 3 is 4. So we have a PEDC count of 4, which is plenty. All we need is 2. So either way you look at that trade, that's winner number 5. Winner number 6 on the PEDC comes over here. Where we have 1 down close bar, 2 down close bars. The pulse extreme line does not move lower. And then we get an up hook and an up close price bar long. That's winner number 6, PEDC. And that might have been it. Did we have one more? Yeah, we did. We had one more over here just recently. Okay. We have 3 down close price bars. 1, 2, 3. Over the course of those 3 down close price bars, we have 1 down move in the pulse line. That's 3 minus 1 equals 2. That's what we need, is plus 2 to have a qualified opportunity. We get an up close price bar and an up hook in our pulse line. We're long at the open of the next bar. Nice big winner. Now some of you are probably watching this and saying, well, why don't we have, just like you do with your other systems, Andy, why don't you have a signal calling indicator for the pulse extreme divergence count? And the simple answer to that is we just haven't created it yet. I tend to drag my feet a little bit when it comes to creating the auto signal calling indicators for our systems, and the reason is, unfortunately, some traders end up using them as a crutch. They are valuable, but it's also incredibly important and valuable to know what causes the signals to fire, to understand internally and what causes them to work. So you're not just waiting for an arrow or a dot to pop up, but you know when you have the ability to anticipate the signals because you know when they're coming, because you know what's causing them. So the next time we release a new Sniper Scalping Systems indicator package update, there will be a auto signal calling indicator for this system. We just haven't done it yet. Honestly, this one, more than, it's important for all systems, but it's even a little bit more important to really understand what's causing these trades to occur with this technique. And so we've had this system for about 6 months. I've been using it for longer than that, but as far as how long individuals, it's been released to sniper owners for about 6 months or so. And normally we don't wait quite that long to provide the signal calling indicator, but this time I've just been really encouraging and kind of forcing sniper owners to make sure they really understand how to find these manually before we provide that support with the indicator. So you know what? That's about 15 minutes. I guess that's enough. That was how many? 1, 2, 3, 4, 5, 6, 7. So 7 PEDC trades since 6:30 a.m. 7 winners, 7 for 7. Might as well highlight real quick the Pulse Streamline Cross system using the 19-bar rule set, which we taught last week. I think it was 6 wins and 0 losses today as well. So a winner here, more than 19 bars, yes. Winner here, that's winner number 2. And we come up here and we have a buy trade, but we're not going to execute this buy because we need action line confirmation. That's the one basic rule, that 19-bar rule along with action line confirmation. We don't have action line confirmation, and then we disqualify the other 2 because they're not 19 bars apart. And then we get this signal, winner number 3, Pulse Streamline Cross. There's more than 19 bars here. Winner number 4. No trade here because we don't have action line confirmation, so that cancels out this trade as well as this trade. You do give up some winners, guys, using the 19-bar rule, but it does leave the cream of the crop. Winner number 5 here. It's not 19 bars to this trade, so we cancel this one, cancel this one. That's winner number 5. And then winner number 6 here, we would not be long on this trade because we don't have action line confirmation there. Action line confirmation comes way over here. After that action line starts sloping up meaningfully, we're getting long for winner number 6. And I don't think there's any others. So that's it. 6 trades that qualify with the Pulse Streamline Cross 19-bar rule, 6 winners. So if you were trading crude oil today using the Pulse Streamline Cross with the 19-bar rule as well as the PEDC trades, you'd have 13-0, 7-0 on the PEDC, 6-0 on the Pulse Streamline Cross with the 19-bar rule. Not a bad morning for a relatively subdued price action. If I shrink this way up, you can see it hasn't been terrible, but since, let's see, since right in this area, this is 6 o'clock a.m. or so. So this move down hasn't been too bad. Let's look at the range. We're looking at, yeah, it's expanded now a little bit. 75 down to, so we're looking at 125 ticks or so, 125 ticks of range. Not too bad. And as such, we've been able to take advantage of it with the sniper tools. So that's a wrap for today, everybody. Have a great rest of your trading day and evening, and I'll see everybody back here tomorrow. If you are watching this video and you have not yet come by and checked out what we're doing in the main sniper trade room, get on in here. If you haven't registered for the free trial, do so. Tuesday through Friday are the best trading days of the week, so don't be shy. Come on in and see what we're doing. You'll be glad that you did. We got a lot of exciting things going on. Thanks, everyone. Have a great rest of your day. We'll see you tomorrow. Okay, guys, that's a wrap for the recording, Rodney. And I had one question come in here. It was a good one. The question is, Andy, how do you, well, let me, where have you trained your eyes to look first to see the PEDC? So that's the question. How do you recognize when it's happening? Okay, so here's what you want to be watching for. And for me, it's second nature. We just had a PEDC cell in the DAX. What you want to be watching for basically is times when the price bars are going one way and the pulse extreme line is not going with it. That's what it comes down to, John. Price bar is up, pulse line is up. Price bar is up, pulse line is up. Okay, so what you want to be watching for, and when you really notice it, is once there's been at least 2 bars. You know, these 2-bar patterns against the pulse line is what you really want to definitely recognize. So we've closed up twice, and the pulse line did not move up either time. That's the biggest thing to be paying attention to. And it really does become second nature. You know, you'll notice the more you really look for it, that most of the time the pulse line really does track the price action. Now, not perfectly. You know, there'll be an up-close bar and the pulse line will be flat. You know, and that happens a lot, but it usually doesn't diverge multiple times. And when it does, we have a trading opportunity, and that's what the PEDC is identifying. So I think we might have an opportunity right here. This was also a PEDC sell winner, okay? Up close bar 1, up close bar 2, up close bar 3, 3 up close bars, only 1 up move in the pulse line, down close price bar, down close pulse, winner. So we had 3 up close bars, only 1 up move. 3 minus 1 is 2. We need to have a pulse count of at least 2. Okay, so just strong trading system. The more time you spend into looking at it, watching it, becoming familiar with it, the more easy it becomes. You know, I don't even have to hardly think about it now. And I know we got Lindsay and a few guys out there that have really focused on it for a while now, and it's a piece of cake. All right, guys. I think that's a wrap. Thanks, everyone. Take care.